Okay, the recording is going. If you have any questions along the way, I keep an eye out on the chat. Let's minimize the window and put it over on our second screen. First of all, we're going to be focusing on NQ. We already took a look at the new schedule ahead of next week, because we have the NFP news event on every first Friday of a new month, and that's Friday the 7th of June. So we will take a look starting from the monthly time frame, really, get an idea of what's been happening on bigger time frames, because we are in an uptrending market, and based on the history of the Nasdaq 100, it's essentially gone up only. Of course, yeah, mainly after 2010, but that's the current market conditions we're in. We're putting in higher highs and higher lows. We had a little market structure shift here. This was our 2021, 2022 bear market. 2023, you can see that at the beginning of 2023, the 3rd of January, we really started to move. So on a monthly time frame, let's clear my entire object tree. We don't need that. And we start by looking at monthly price action. So the first thing that really stands out here is if we look at simple market structure, we see that price is continuing lower, forming a lower low, a lower high, and one more time a new lower low on the monthly. So in a short-term downtrending market, when we change right here, once we closed above this wick right here, the most recent lower high. So this is our monthly market structure shift. Also interesting to see how nicely we came back to retest those areas on the monthly time frame. So this is our monthly market structure shift. If we go on a weekly, we would consider it as a weekly market structure shift as well, and also a breakup block, down closing candles holding support after we break above them and retest them. That's going to be important later on. I already had a little look at the chart, so that's, well, in the end of the day, still just my opinion. All right, let's quickly get done with the monthly time frame. We have a nice monthly bullish fair value gap overlapping with that here. But that's all stuff from the past. We have a bearish fair value gap right here. We retraced into that, rejected, came back to retest our market structure shift level, overlapping with the lowest bullish fair value gap. So if we're only looking at this range, what I'm doing right now will be more important. Well, if we look at price action right now, we had 3 months down, perfectly respected. I mean, this is almost to the tick on the monthly time frame, which is pretty fucking awesome if you ask me. We shift market structure, we keep on pushing, we fill in the highest bearish inefficiency. After it's filled in, we have 3 months to the downside, tapping 50% of this monthly bullish fair value gap. And once that's done, we have a very bullish November here in 2023. Pushing back into that, then looking for, well, higher prices from here is, well, pretty much a no-brainer. And if we keep on going, this is a bearish fair value gap. Once we close above it right here during the month of December, what do? We come back to retest it during the first month of January and first month of 2024, using this inverted bearish fair value gap, so a inversion fair value gap, to hold support. Where do we hold support from? Roughly the 50% level, and we keep going higher. And we actually managed to break all-time highs during that same month. So that's very interesting to say at least. We could also always, within an uptrend, look at down closing candles to act as support. We almost saw that support tap right here. So this is our market structure shift level, our monthly inversion fair value gap. Monthly bullish fair value gap. No, let's label it differently. And just call it monthly FVG. Everyone should be able to tell that this is obviously a bullish fair value gap. This is our all-time high. Let's expand it over till 2025 for the monthly time frame. Let's label this with all-time high. Market structure shift plus order block. So now it's more interesting to actually see where we're currently sitting at. Currently, we formed a new higher high. We closed above our all-time high 2 months. Then we came back inside of our all-time high range. And now this month it's, well, may essentially just, why does the monthly June candle already show itself? Well, I guess we gotta have to wait until Monday for that, of course. But this is a new highest close on the monthly time frame. This just confirms that on the monthly time frame we're still in a bull market. We had a retracement. Essentially, what do we do here? We hold support on down closing candles, retest them. We also had a nice monthly bullish fair value gap here. Monthly fair value gap. There we go. Monthly fair value gap. We have another monthly fair value gap here. But this only gets interesting as a potential target in case we really turn around and close above the highest one. Similar to what happened right here. You might wonder why I'm not pointing out this fair value gap. Well, we could, but for the sake of what's happening right now, this is not really interesting. We would have only used this monthly fair value gap to confirm possible lower prices, to fill or to retrace deeper into the fair value gap below. So we continued up. We had 1, 2, 3, 4, 5 months to the upside, filled in the bearish inefficiency, filled in the bullish fair value gap. We didn't continue higher. We actually failed to continue higher, invalidated this bullish fair value gap. During the next month, we came back to retest that now inverted bullish fair value gap and use it to deliver lower, to fill in 50% of this lower monthly fair value gap. So just because we invalidated, if we just look at this price like right here, from this high to this low, we could also be looking at the 50%, which would also be sitting just at this level. But before we really completely turn bearish on the higher time frames, such as the monthly time frame, we would have to wait for confirmation closes below this monthly bullish fair value gap. This never happened. Yes, we closed below this bullish fair value gap, hence the deeper retracement into this bullish fair value gap. Actually a nice target. And then during the next month, we immediately invalidated this, confirming, well, early confirmation of the 2024 bull market. All right, but like I said, we want to focus on what's happening right now. So right now, we tapped the highest monthly bullish fair value gap. We have a monthly bullish engulfing. We have a down closing candle on the monthly time frame, so we could expect or anticipate support from that monthly down closing candle. I'm going to label it as monthly order block. That's all we need to know. Monthly order block. And in terms of targets, that's what's most interesting, because we all know, and well, if you started trading around 2022, you don't really know what it's like trading when we're entering price discovery. With price discovery, I mean trading when we're forming new all-time highs, not every single day, but almost every week or every month at least. That's what happens in bull markets essentially. The issue is we don't have anything to the left to target. There's no buy side liquidity up here that we can target, and no price is going to run into that. It was pretty convenient to have an all-time high target, but once we're past that point, things get a little bit more tricky. And then what I really like to use is standard deviation targets. And if we look at this market structure right here, we had our retracement. We just looked at our last and final lower low, lower high, lower low, higher high, higher low, higher high, higher low, question mark, higher high. That's the thesis. And we want to be looking at our final move from a lower high to a lower low before we broke it. So the final leg down essentially, which would be this one. Let's remove this ugly line. Of course, we could be looking at maybe short-term highs, but I don't really like that. I really want to look at market structure that's standing out. I'm not someone who's drawing lines in this little chop right here. We can do that on the weekly time frame when we really can, well, look at what happened during this period, essentially December and January of 2023, what actually happened down there, and potentially we see another final manipulation leg that we could be using. But in terms of the monthly, our best bet, standard deviations ICT, let's remove the 50% level and just look at this perfection. I didn't prepare this. I'm doing this all essentially, well, with the flow. 0.5 standard deviations, perfectly matching up with what? Well, the monthly bearish fair value gap. We filled that in. We came back to retest, well, our zero level essentially. Let me actually plot that to the left. A little bit of a perfectionist myself when it comes to charting. One standard deviation, just a few points. Well, a few points on a monthly scale above the all-time high. And those are potential targets. I'm not saying that we're going to reach 3.5 to 4 standard deviations. We could look to, for example, examples in the past. We formed our all-time high. This was still in a major uptrend. I don't want to start here in 2007, but I look at manipulation moves where we hunted stops and then we continue to go higher anyway. 4 standard deviations. This was the COVID dip. Could also be looking at that and project standard deviations. But I'm more interested in seeing what's happening right now. We know for a fact that these standard deviation targets work on the lower time frames. And because price is fractal, we see the same things on higher time frames that we also see on lower time frames. That's a given fact. That's why we can use this as potential targets. So a next good target would be 1.5 standard deviations, 2, 2.5, 3, and 4. Only thing that really stands out here is that it doesn't pay to be a bear in a bull market, at least when it comes to the NASDAQ 100. And if you think that, well, technology keeps on advancing and developing, and companies, well, developing those technologies, well, essentially they're gonna keep on growing in terms of their market cap, and well, that's essentially why NQ went up only, unless there's gonna be a sudden curveball. But that's about all for the monthly time frame. Do you guys have any questions about that? Because now would be the perfect time to ask me that. I'm going to wait a little bit. Don't be shy. Feel free to ask. Let's make this interactive. Or maybe the question, did you ever look at the monthly time frame like we just did right now? The most important thing that I want to point out is that we closed May as a bullish engulfing candle. We opened up pretty bearishly. I mean, of course, we tapped this monthly bullish value gap. We open up with a monthly volume imbalance right here. So we can see monthly close, monthly open. At the time, that looked pretty bearish, not gonna lie. Actually, this is the fair value gap. Now that I zoom in, I actually see that. But we managed to recover the entire April dip just by looking at the monthly time frame here, and we closed above April open. April open is essentially our price level for the monthly order block, sitting exactly at, let's make round numbers, 18,500 for the Nasdaq 100. Our all-time high conveniently sits just below the 000 level of 18,000. And the next major, well, actually 40 level would be 20K. Roughly lining up with that closest standard deviation target that, well, we have after 1 standard deviation, and we go for 1.5 standard deviation of our final manipulation move. Not trying to call a top, that's also not really the smartest thing to do, but we'll see how we continue. That's just a higher time frame. I know we're not really swing traders, just trying to, well, store some time to see if there are any questions, but I don't see any questions in the chat, so we are just going to put all of this into a folder. We're going to call it monthly. I'm also going to share the template, so you don't have to, you can just copy the exact template and, well, save it as, I don't know, Matt's higher time frame analysis right down here. Then you can always like look at it if you want to, or you can just, well, do it yourself, which perhaps is the best thing you could possibly do after we're done. So, all right, no questions about the monthly. Let's bring it down to the weekly. Quickly tidy up all our drawings. That's just me having little bits of OCD. Let's go with our monthly bullish fair value gap starting here. Monthly order block. This is our monthly open, all-time high. All right, so just looking at, I'm not gonna start all the way from the bottom again. We could care less, at least for this live stream, of what happened down here. That's already in the past. We want to know how we can potentially see or forecast what's likely gonna happen next week by looking at the weekly time frame. All right, so we still have our monthly analysis on the chart. This is our April dip. We recovered that nicely during the last 1, 2, 3, 4, 5 weeks have been straight to the upside. So a pretty bullish month. We've seen that already on the monthly time frame. Let's hide the monthly time frame for a second. And right now, because we're on the weekly, all we're going to focus on is this price action. That's on the chart right now. Weekly order block. Just looking at down closing candles as we move to the upside. This is another weekly order block, exactly essentially where we had the monthly order block or the monthly market structure shift. It's always nice to see time frames align with each other. Let's actually make that simple and just grab, always using the opening of those down closing candles, by the way. Here we missed it by a little bit, but that's all right. Like I said, we're going to focus on what's happening up here. Down closing candles would also mean that we are very likely going to see those down closing candles, now that we closed above them, that we're likely going to see them as support. That's essentially the point. Weekly order block, weekly order block, weekly order block. What else do we have sitting up here? We have a weekly bullish fair value gap. Weekly FVG, couple of them actually. We just, yeah, draw them in for the sake of it. We can look at our most recent PD array on a weekly time frame. 50% level, sitting right here on this middle fair value gap. So that could be a case where we first fill in all these inefficiencies before we continue higher. So after repricing to a discount to deliver into a premium, higher prices, after delivering into that premium, we're now going to retrace back into a discount of this range below the 50%, fill in, for example, this inversion fair value gap overlapping with those two bullish fair value gaps. So we can also point that one out. That's essentially what we could be looking for, a retracement into potential left behind inefficiencies. Or we're just going to keep on holding that highest bullish fair value gap and we continue higher. Those are both scenarios that are likely, if you ask me. You want to add anything to that? Feel free, really feel free, Kati, for example, to share your thoughts here on a weekly time frame. We could, that's scenario number one, simply hold support here. We filled in this entire highest bullish fair value gap, continue higher from here. But we could also see next week close below the weekly fair value gap with a wick into this fair value gap, and then see the week after that close somewhere here, and then we continue higher. Essentially, what already happened on a monthly time frame a little while ago. Let me put this all into a weekly folder. Weekly, let's hide the brush. So right here, higher low, higher high, and now we could be in that phase where we retrace into that discount first before we continue higher, similar to what we saw on the monthly time frame, if you remember. Right here, okay, we didn't break above a major range. We could say that we cleared all this monthly buy side, filled in the monthly inversion, bearish fair value gap, sorry, reached 0.5 standard deviations, and after that, well, we had a monthly candle with a large wick to the downside and a relatively small bearish body. We filled in the highest bullish fair value gap. So at this point in time, we could have also argued, if I go select bar, if I go to this monthly time frame bar, this is very similar to what we see on a weekly time frame right now. We filled in the highest bullish fair value gap, but we have more inefficiencies below that we could be filling in potentially. The week ahead. All right, what's happening now? I think my trading view is a little bit laggy. Come on. I'm not really sure what's happening yet. But you know what I mean. We filled in the highest bullish fair value gap. We could have anticipated higher prices from here already, given this wick on a monthly time frame. But yet we continue to go lower. Already tapped the lowest bullish fair value gap of this price leg. But the important thing is that we closed below the highest one, which essentially gave the confirmation that we're likely going to dig down deeper into this lowest monthly bullish fair value gap. Same thing here if we go to the weekly. We have a relatively large wick due to Friday's recovery, essentially. We filled in the highest bullish fair value gap, but we do have bullish fair value gaps below us. And that's the interesting part. Gonna get rid of the inversion fair value gap. We all know it's there. Let me hide the monthly again here quickly. Do we need the all-time high? No, we don't need that. That's fine for the weekly time frame. So the question is, will we continue higher from here? Or will we first start to retrace into these weekly inefficiencies that we left behind? And now I really want to ask you, what do you think? Just, you don't have to, well, pitch it to me or anything. You just have to tell me what your gut feeling tells you. Lower or higher? Let's see if anyone wants to speak up. You're looking for buy. Thanks for sharing that. You're looking for lower. All right. Memory of tree. Let's see. Yeah, essentially, it's very plausible. It's very hard to, well, make a fixed decision. If I were to trade this time frame, if that would be the question, what would I do? Well, I would simply draw my fib like this. I would, after breaking this high, and if I didn't already enter longs on this step right here, if I were to enter the market right now here, not knowing essentially or disregarding that this is the weekly time frame, what would be my approach? I would DC $8 cost average into the long position. We have our 50% level. Let's say I have, for example, $10,000 to place on this trade. I would start adding the first 2,500 on our highest weekly fair value gap. That just in case we go higher from here, I'm already filled and I'm already having a running position, but I don't fully enter with 100% of my, well, of my capital. So in case we continue to go lower, I add another $2,500 right here on this weekly bullish fair value gap. Then I add another 25% right here and another 25% in discount. How you will distribute that, you could say, okay, I'm happy to enter with 25% in a premium, just to, well, in case if we don't go back into or below the 50% level, into a discount of this price range, essentially, that I'm at least in with 25% or 50%. Well, that's essentially up to the risk manager. And in case we go below the 50 pip into a discount, that's why I really want to load up. So that's very plausible. So like I said, keep in mind, we're not trading the weekly time frame. We look for, essentially all we need as scalpers is lower time frame volatility. As long as we have lower time frame volatility, whatever happens over the long term doesn't really affect us. Of course, it's good to know where we could likely be going, but in my opinion, just from my experience, I don't like being, well, stuck to one specific outcome, saying that we are going to go higher from here. And essentially, that would mean that I'm ignoring all the potential short setups that are showing up on the 5-15 minute time frame, just because I'm so convinced that we are going higher from here, if you know what I mean. In that case, if I would DCA into that range, I would put my stop loss right below here. Imagine this is a 5-minute time frame and price just moved up here. We just formed a new all-time high or a new high of the day. You wouldn't enter up here. You would wait for a retracement into the inefficiencies, and that's how you can think about the weekly time frames as well. All right, are we going to continue higher just after filling in the highest bullish fair value gap? Well, we all know how the 5 or 1 minute time frame sometimes is. It depends on the momentum. Simple. Sometimes we happen to retrace very deeply and then continue higher. retesting that lowest possible order block, for example, whatsoever. And sometimes we just wick into the highest bullish fair value gap and we keep on rallying further to the upside. Same for shorts, obviously, but this is a bullish example, so it makes sense to compare it to a bullish example. Imagine this is a 5-minute time frame and think about how you would enter on that. I would personally enter on the highest bullish fair value gap and add more at the 25%, at the below the 50% level, essentially. But I would like to make sure that I'm actually entered on the highest bullish fair value gap, so I'm not missing out or being too skeptical, saying, well, we can't just go higher after filling the highest bullish fair value gap. I want to see the retracement below the 50% level. That's the point. Looks like a market structure shift for me. Expect retrace below 0.5 fib and then go up. Yeah, that's a good point. I mean, if we look at past price action, we've been holding up this uptrend here very nicely. We closed several times above our old all-time highs. It's an election year, but like I said, it doesn't really matter. Of course, it's nice for some guidance to know, okay, in case you want to hold swing trades, for example, okay, where the only interesting thing from my point of view is to know, okay, where could we possibly see the low of the week being formed next week? And if you happen to see a setup on the 1 hour, 15-minute time frame, for example, at around that specific level, well, then you have a little bit more confluence and confidence in actually holding that position. That's the only thing I would really use it for. Because like I said, on the lower time frames, I prefer to be a little bit more free, but that's, well, my trading style, I'd say. You would have to figure that out for yourself. Let's see. We have our 50% level. That's all. Now let's actually. Should we leave that on here? Yeah, maybe, but without the background. Make this one black as well. This is our 50% level. With the new trading view update, we can actually write a little note in here. This is our weekly PD array. Not like this. Consequent encouragement. All right, that's the weekly time frame. Let's drop it down to the daily time frame. Put this into the weekly. Let's hide the weekly here for a second and take a look what we are working with on the daily. Well, we know it's NFP week, so it's going to be rather volatile. Always hard to predict the future, of course. Except all we need is lower time frame volatility and we're good. Nice wick here, that's for sure. Slow grind up. We cleared all these short-term lows. We kept holding support and filled in our highest daily bullish fair value gaps. Daily fair value gap, we filled all that out. In terms of sell side liquidity, if we would be looking for anything, those would, no, let me actually do this one first. Make it one thick, call it Let's also see if that coincides with weekly sell side, like only with the fair value gap. Okay. Daily sell side. Let's actually see if we can pick anything from here on the weekly time frame. No, not really. That's fine. Daily time frame, go back to that. Daily sell side liquidity. We know we have all our weekly stuff down here happening as well. It's the most recent daily bullish fair value gap we held support from, but we also have bearish fair value gaps now on a daily time frame. We haven't seen that on the monthly or weekly time frame, just on the daily time frame. But we want to make sure we actually draw them out. Why? Let's make it like this, become now for the first time daily fair value gap plus. Plus for me is a bullish fair value gap and minus is a bearish fair value gap. Daily fair value gap minus. Daily fair value gap minus. And the interesting thing here is that if, let's say next week is going to look something like this. We're going to have Monday down, like Kati said, retest the 50% level of this daily wick here. Bounce from here, push up higher. Wednesday, Thursday. I know that's not according to the actual time scale here, but I'm just, drawing freely here. Once we see the closes above these daily bearish fair value gaps, that's really the confirmation of us continuing higher. Like always, if this would be the 5-minute time frame, okay, nice. We hunted some stops after forming new highs. We have a nice rejection wick here. Now the question is, okay, when is that retracement over? And on a 5-minute time frame, we do it the same way. Well, the retracement, from my point of view, it's over once we invalidate bearish fair value gaps. That's really when we can start to use the inversion fair value gaps to target higher prices. That's the idea that I would be looking for on the daily time frame. We are still holding above the highest daily fair value gap 50% level. We know we have sell side below and left behind weekly bullish fair value gaps and also daily bullish fair value gaps that could potentially be filled in. In that case, that retracement is going to last a little bit longer. But in case that retracement is over, well, that's what I would be waiting for to really be confident on a daily time frame that we can actually use these bearish fair value gaps now as support. Yeah, but let me think. That's also the point where it gets a little bit tricky. Like I said, there's no guaranteed, 100% confirmation that I could tell you in terms of the weekly outlook of, okay, this is going to happen. We took external liquidity. We are running now back into internal. That's usually how markets move. Rating external, 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 and coming back to clear internal. On the inside, outside. We cleared the outside. We're coming back for stuff on the inside. Question is, how deep are we going to see that if we now turn on the weekly? Put all of that into the daily folder. And make sure that on the weekly we also see our premium weekly PD array. You can see that the sell side liquidity lines up with our weekly PD array consequent encouragement. So it would make sense to trade into that. Same as it would make sense to continue higher from here. But what I would use as confirmation that we are actually that we could actually target buy side again on the higher time frames would be close above these daily bearish fair value gaps. Very simply put. Once we see that, we can confidently say, okay, we're more likely to see buy side again. But for now, at least, we're retracing. Yes, we hunted stops right here, and this could be the potential, well, can't really say low of the month because the month has just begun, and we're going to see the first trading day of this new month tomorrow. Considering that fact, imagine a scenario like this. We start trading with the new month, form our low of month somewhere below the 50% of our weekly PD array, and then continue higher. Would make more sense to me at this point in time, because yet we don't, the only confirmation of potential upside and that the retracement is done is this daily. Is it also on weekly and weekly rejection wick here after filling in that highest bullish fair value gap on the weekly and our highest daily bullish fair value gap? But we still have, well, pretty obvious sell side targets below, and also, well, after taking buy side again, we could potentially retrace into or below the 50% of our weekly PD array. Very simply put, that's going to be depending on how bullish we actually are. Like I said, we don't want to make this too complicated. Trading is not complicated. We just make it too complicated. That's usually the issue. Daily time frame. Let's remove that brush. Let's hide the weekly. Because we could potentially call this a daily break-in structure. Higher high, higher low, higher high, higher low. Failed to make a new higher high, but a new higher high in terms of body closes. And now we closed below our most recent higher low. And we rejected from the, well, if we go to 4-hour time frame very shortly or very soon, rejected from that order block. I don't know. I'm torn between longs and shorts. I think for now, of course, this rejection here says a lot. But like I said, I think to really confidently say we're going to continue higher, I would like to see at least the first close above this daily bearish fair value gap, and then take an inversion fair value gap long into this one, just as an idea. And once we see the definitive confirmation close above this daily bearish, then we could really look forward to target new all-time highs. I think that's the best way forward in terms of the daily time frame. But let's break it down to the 4-hour time frame and check what we see here. Now the ICT all-in-one indicator is popping up, but we don't need that at the moment. Quickly tidy up all our daily time frame stuff. That's essentially all we need. Looking at the 4-hour time frame, this is a pretty nice low formation. I mean, essentially textbook. Filled in all our daily inefficiencies. Yes, like I said, we talked about it several times now. We left behind daily sell-side liquidity. But this is a very strong bullish engulfing. This is a big bearish candle. I don't think many people have seen this 4-hour move coming. since we are in a downtrend. So I'd say the highest probability for, let's say, Monday, Tuesday, Wednesday, in my opinion, after looking at this 4-hour bullish engulfing, is maybe retesting that order block here, the lowest down closing 4-hour candle, 50% of this daily bullish fair value gap, something like this. We open up, we retest that, and then we try to work our way into this daily bearish fair value gap. Remember? And at the same time, while doing that, we would also take out buy side right here. And once we are in that daily bearish fair value gap, we'll see and reevaluate. But for now, this is the most likeliest move, in my opinion, just given this 4-hour bullish engulfing after filling in the highest daily bullish fair value gaps. If that would have happened a little bit further down, after wicking below the 50% of the weekly range and taking out the remaining daily sell side liquidity, then this would be a bigger long confirmation. But well, I mean, we ran out major lows here also on the 4-hour time frame. Good. No, let's not do that just now. I think for now the easiest thing for us to trade into would be buy side targets. Previous day's high right here, previous day's high at 18,667, and from here, well, we'll see if we use that as potential. No, if we use it as resistance to deliver lower into the sell side liquidity, or if we do close above. If we see the daily close above, we could target the next bearish daily fair value gap, and depending on how we react here, we could run into sell side. Like I said, there are infinite possibilities. We're just looking for a little bit of volatility, but given the fact that we had a bullish 4-hour engulfing, let me go to the 4-hour and delete these brushes. Where's this line coming from? Let's delete it. No, let's not delete it. Let's take a look at, remove the daily here and just look at the 4-hour. This is what our weekly range looks like on a 4-hour time frame. I'm good at the day-to-day business in terms of prediction or predicting it. And in my opinion, the most likely move that we're going to see Monday, Tuesday is to move into this daily bearish fair value gap, given this 4-hour bullish engulfing candle. The potential of us delivering into the sell side and below the 50% of the weekly PD array, all the way from this low to this high, it's still in the cards until we will get the confirmation close above these two daily bearish fair value gaps. Very simply put, that's it. Now what I want to do is, well, first of all, ask you if you have anything to add to that, or anything you want to point out, maybe something that I, well, forgot to talk about. Otherwise, I'm going to be looking at my lower time frame analysis that I'm going to be using on Monday. Let's see. Give you guys some time. I just spoke a whole lot. So yeah, feel free to add something or share your opinion. Feel free. All right, I don't see anyone typing. Oh, Cartier sniping. Nice. I asked if anybody wants to add anything to what I just talked about, or, well, share their ideas, or maybe something that I forgot. Otherwise, I'm going to be doing my lower time frame analysis now for, well, Monday and Tuesday, essentially. Starting on the 4-hour time frame. Let's expand that over to, this is Monday, Tuesday, Wednesday, Thursday, Friday, end of Friday. Let's see, end of next week. Yeah, on a daily, that's a 2022 model. Market structure shift, daily bearish fair value gaps. Like I said, that's, given this bullish candle here, the most likeliest thing that we're going to see, that we're going to run out the previous day's high. So let's also mark that out. Friday's high. And this would be Wednesday, Thursday open. That's going to be our Thursday's high. Yeah, perfectly said. 5 days, 5 news events. Then especially the NFP news event on Friday. Anything could happen. That's why it's really hard to predict what's, well, going to happen tomorrow. Thursday's high. Let's actually do it like this. Put it to the left. Friday's high, Thursday's high. Let's go to 1 hour here quickly so I can draw this out more easily. Thursday's high, and then we have Tuesday's high and Monday's high. That's Tuesday, that's Wednesday. Wednesday was straight down. So for the 4-hour time frame, those would be our best targets. Thursday's high, Friday's high. In terms of fair value gaps, the only fair value gaps we have available is this one right here. And we can see that those 4-hour time frame fair value gaps have been very beautifully respected. I mean, just by looking at it, we never closed above it after filling it in and tapping the 50% to the tick, essentially. Continued lower on that next candle, closing back below the bearish fair value gap without having cleared the sell side liquidity. So this was a pretty nice confirmation that, okay, well, we trapped traders short, likely liquidated them with this rejection wick. Now we're going to continue it low on that next candle. Pretty nice move. For next week, most interesting to me is this 4-hour bearish fair value gap. Once we sit close above that, we could really be looking for Friday's high to be cleared, and then from here fill in our daily bearish fair value gaps, which is essentially well positioned right above Friday's high and well right around Thursday's high, a little bit below that actually. This is a new day opening gap, is it? Let's see, 1 hour time frame, 16, 18, yeah, that's a new day opening gap. So volume imbalance stands out here. So yeah, really, once we see close above this area, that's when we can really look for those longs again heading into next week. What else would be interesting? Well, for our inversion fair value gap, we could be looking at that. as potential resistance once we trade into that. So let's point it out because we used to hold support here once, twice, 3, 4 times actually before we closed below it. Then we use it as resistance heading lower. Now let's do it like this. 4 hour, put it over here. Want to be using too many inversion fair value gaps. Let's just leave it on those bearish fair value gaps of the current price lag. If we look at the current PD array, I would be pointing out this range. Essentially our previous week's range. Managed to get back to the 50% level. Once we're above that, we're in a premium. Paired with those daily bearish fair value gaps would be a, well, like I said, anything could happen with 5 news events next week, but that's something to, well, keep in the back of our minds. Once we're back above that 50% level, close above this 4-hour bearish, we're in a premium. We have our daily bearish fair value gaps just above 18,668.5. And next bearish fair value gap on a daily time frame is then starting at 18,753. Then we have Thursday's buy side. We could fill both of these in and then head lower. Or we close above them and continue higher. Keep it simple. All right. For our range, after our market structure shift here, I won't leave that on the chart. That's all I really need for now, at least for our time frame. This is our previous week's high. We always make this a big fat red line, and this is our all-time high. Let's make that a green line. Very simply put that to the right now. Previous day's high and first day's high. Let's leave that there, that's fine. So previous day's low, we need that for Monday. Bottom. Previous day's low. Yeah, that's really all we need. In terms of buy side liquidity from the 4-hour time frame. No, let's remove that. We don't need that. Close back above that. That. Only thing that would be interesting is this new day opening gap because it stands out. And we used it several times. New day opening gap. Close above it. Use it as support, support, support. Bounce inside of it. Close below it. Interesting area. Here on the 4-hour time frame. Did we mark that out on the daily time frame? No, we did not because it has been closed in already. Now let's just leave that on the 4-hour time frame then. New day opening gap and new week opening gaps have been rather small lately. New week opening gap. No new week opening gap. Yeah. Nicely closed in. So all right, I think that should be all for the 4-hour time frame. Let's drop that down to the 1 hour time frame. Previous week high from last week Monday or Tuesday actually. 4 hour buy side, equal high buy side actually, first day's high, previous day's high, previous day's low. New day opening gap. Now everything's nice and tiny. Now we can hide that stuff and look at the hourly. Well, most of the things on the hourlies that actually stay the same. So I'm gonna name this my, no, let's leave it for the 4 hour time frame. But I think all these lines should really be put in a different folder. If we turn these on, we have our 4 hour fair value gaps. So we can very simply quickly turn on our 4 hour fair value gaps. And if we put all these lines into our folder and call it point of interest, you can very quickly see, well, next week, most interesting points of interest. Then we can put all these to the right. 4 hour buy side liquidity, previous day's high, previous day's low. Let's also put those lines into the POI folder. So we only have fair value gaps in our daily, weekly, blah, blah, blah folders. Hide, and we can quickly, just by opening up the object tree, enable and disable that. Let's actually put them into that folder. Daily sell side liquidity. Daily sell side liquidity. 18. All right. Tidy everything up, and now everything's ready for work next week. Except the 1 hour fair value gaps. Fair value gap. 1 hour FHE. No. This is a inversion fair value gap actually. One thing that I want to change is I want to grab this one. Those two, come on. Open up the 4 hour folder. I want to grab this rectangle and put it away, and this one right here. Just those two ones into a folder and call it New Day Opening Gaps. So if we hide the 4 hour, we still see our New Day Opening Gaps. If we only have the 1 hour time frame turned on, and already start putting this into a folder and call it 1 hour. Put the point of interest folders on the top: 1 hour, 4 hour, New Day Opening Gap, daily, weekly, monthly. Perfect. For Monday, what other fair value gaps would be interesting here on the hourly time frame? Well, we have another little inversion fair value gap here on the hourly. Very little. Let's put it on there, just for the sake of it. 1 hour inversion, 1 hour bearish. We so far never invalidated it. This is another bearish here on the 1 hour. One hour buy side liquidity. We're gonna put that into our point of interest folders. That should be sufficient, I think, in terms of the weekly outlook for NQ. Are there any questions? I won't go down to the 15-minute time frame. I think that's where it really would go. You know, we could recap Friday's price action, maybe what we saw during the PM session, but in terms of a weekly outlook and what areas or what, well, fair value gaps we could be using heading into next week, I think that should have covered most of it. Everything's organized. 1 hour hidden, 4 hour fair value gap stop. New day opening gaps. Put it here. 4 hour, 1 hour. Oh, where are our daily fair value gaps? Oh, right, here they are. Done. Weekly fair value gaps. All right, here they are. Monthly fair value gaps. All right, there they are. Very efficient charting, I would say. Let me make sure I save the template and enable sharing, copy the link and share it with you guys first. Memory of tree, feel free to share your question with us. Don't be shy, I saw you typing. Don't want to put you in a spotlight. So yeah, like I said, feel free. Now we could even split up our charts like this, for example. Put NQ all over the place and then, well, on this chart, well, okay, there is none. No, okay, forget what I just said. I have one question, correct me if I'm wrong. Is it candle close above 1 hour fair value gap owner is bullish, or the price need to take out sell side and then close? I know what you mean. I might say, good question. Current price action didn't take out liquidity, yes. It might be a deep retracement to continue lower, but in my opinion, we rarely see those. If you know what I mean, like for example, right here, we took out liquidity, that's for sure. Yes, we missed some daily sell side liquidity targets, but essentially it's similar to this right here, what we saw last week. We took out sell side. Let me use the drawing tool, that's quicker. We took out sell side, but we left behind sell side right here. So now we had this inversion fair value gap. And you could also argue this might just be a pretty steep retracement. And now we're falling up, turning around to take out the sell side liquidity, yet we significantly continued higher before we turn around right here. And then we eventually hunted that sell side liquidity and this one. But once again, we failed hitting this one. So what did we do? After taking sufficient sell side liquidity, but not all potential sell side liquidity targets, well, we retraced very aggressively, almost formed a new all-time high while retracing before eventually taking out that sell side. So we could see something very similar once again. We took out sufficient sell side liquidity. We retrace to take out buy side and then come back to target this daily sell side. But I'd say generally speaking, lower or higher from here. It's still hard to say on the 1 hour time frame. I just based on a 4 hour time frame, I'd say higher. On the 1 hour time frame, of course, we have lots more information. I know we didn't take out these daily sell side targets, but we took out sufficient sell side. That could be enough. So there's no right or wrong answer to your question, essentially. You would have to make up the answer for yourself and implement that into your rule set, essentially. But most of the time, what you'll find is that you always see some sell side liquidity or buy side liquidity being left behind, but it's still, once it closes above the fair value gap, it still keeps on moving into the direction, even though the liquidity below was left behind. Because not always we're gonna fill or take out the sell side or buy side that we anticipate, if you know what I mean. We took out sell side liquidity, we had our retracement. Like I said, for me on the daily time frame, confirmation that the retracement is over if it is once we close above these daily bearish fair value gaps. But for the hourly time frame, yeah, of course, we could see price just cut through all of that and then continue lower. Well, then it's pretty obvious what's likely going to be the next draw on liquidity, our daily sell side. But if we hold support here, well, we also have pretty obvious buy side liquidity targets for our 5-minute time frame. Like I said, that's actually why I stopped doing these weekly outlooks, because they tend to make things more complicated. And more often than not, you end up with, well, analysis paralysis, because like we said before, there's an infinite amount of possibilities, especially during a week with 5 red photo events every single day. Well, with red photo news every single day of the week. So like I said, it's hard to predict. Best thing we can do is react. Unless we, well, consider ourselves swing traders, then we would look at daily and weekly. I would personally just look at the weekly and scale into my positions, essentially. We've done the best we could. We can just prepare ourselves for, don't want to call it a battle, but you know what I mean if I'm saying battle. That's ahead of us next week. Let's get rid of these lines. That's all we can really do. If it would be that simple, well, we all would, be millionaires, if you know what I mean. Do you think full porting CPI news event is the way to go on a new 50K count the next 2 weeks? Depends on how you want to play it. I mean, if it's an Apex account with the 1-day pass requirement, sure, you could go for it. But if you only have one account and you only have funds to pay for one account, then it wouldn't make sense. I mean, then you're literally better off just, well, I don't know, doing something else with that money. Well, of course you can try. But if you're out for, or if you're looking for that consistency, I mean, everyone's able to get lucky once, but getting lucky, well, consistently, that's rather complicated. Well, basically impossible. So just from my point of view, there's no real skill in saying, okay, CPI, NFP, CPI, FOMC, higher, lower. I would only do that on a separate, well, let's call it gambling account. Yeah, of course. If you're in that mood and if you have a working strategy with experience, then of course, well, like I said, then it's a different scenario, of course. If I may ask, what's that strategy? Just out of curiosity, since we're still talking here. Curious to know. When we're at the end of the live stream, let's have a little bit of a chat. Let's see how long we've been talking about NQ for exactly 1 hour and 15 minutes. And yet we still don't know what's going to happen next week. That's the funny thing. We can only guess and anticipate and think of hundreds of different scenarios. See you on London session, Kati. Until tomorrow. Waiting to see you there. Nice. Nice to hear. Thanks, that's really appreciate that. A lot of your stuff helped me in the beginning. That's actually, since we're still put that over here. So I don't have to look on my second monitor all the time. Yeah, I agree. Well, that's funny to say that I agree, but it's interesting that you use less inversion. Well, I also started with inversion fair value gaps, I'd say this year, but well, I like the perspective of it. To, like I said, if we go back to the daily time frame and now turn on our daily. I know we have lots of stuff going on here on the daily, so let's hide our points of interest and our new day opening gaps. I think it's just a great confirmation to have in your arsenal to say, okay, we closed above the daily bearish. Now we could be looking for higher prices from here. But of course, well, essentially, because it's a quicker method of getting in with the trend after invalidating bearish order flow, bearish fair value gaps, then always waiting for the bullish fair value gap to form with the retracement. That's the only thing why I think inversion fair value gaps are really handy. But of course, well, as an example of the trades that I took during the PM session, I mean, we traded the AM session, if you remember, Friday's live stream. We were a little bit too zoomed in hindsight, looking at the 1 minute time frame here, noticing where did we enter? God damn it, let me see. 1 hour time frame, we retraced, 9:30 opened up. We inverted all these fair value gaps, and I think we just targeted. Damn, I don't really remember, to be honest. About my channel, I'm lost, but well, that's not the point that I tried to make anyway. I wanted to share the setups that I took during the PM session. Didn't use a lot of risk, just used it to, well, let's show up the live stream funding pips account. Sign in here, home. Still in phase 2, still in a little bits of drawdown, negative 1.25%. This is the entire, well, PL of May. Started the phase 2 beginning of May, second week of May, third, no, is it? Yeah. Well, really the first full week of May. And then I fumbled a little bit during the third week. But yeah, those PM session setups that I took were all the way down here, essentially. also based on inversion fair value gaps. After we hit all the sell side targets that I, well, marked out, I saw the first inversion fair value gap and the second inversion fair value gap. A tiny little bullish fair value gap here, but I don't draw these out because they're not interesting to me. It's just too simple, too easy to close above or below them, if you know what I mean. So I waited essentially looking at this PD array from this candle's high all the way to this candle's low. This is the PD array I'm interested in. We have two bearish fair value gaps right here. Okay, we close above the first one. Nice candle, wick to the downside, taking out this low. Almost no wick to the upside, but we still have the second bearish fair value gap to break through. So I place my first limit order in case we get retracement to this inversion fair value gap. Nah, I'm lying. I didn't place a limit order here. I wanted to see full confirmation before I take longs into this buy side liquidity right here, paired with the bearish fair value gap. After continuing lower for the entire AM session, I thought we might be ready to retrace, but I wanted to see confirmation, and that confirmation for me came in once we closed above this 5-minute bearish. Then I placed my limit order right here for my stop loss right here at this low. Target right here at a 1-to-1 actually, something like that. I think I actually entered here at the 50%, and then it turned out to be a perfect 1-to-1, yeah. And from here, well, we just continue to go higher. This would be our next short-term high target. So this was right with the 1 a.m. opening, 1 p.m. sorry, right out of lunch hour. So still risky. I only risked like $100 on that one. We continued higher, really started to show some early signs that we are really picking up here. We didn't close above the 1 hour, but I'm pretty sure we closed above most of the 15-minute bearish fair value gaps. Well, at least the first one. So I looked at this retracement heading into, well, the power hour, 2 p.m., 3 p.m. until 4 p.m. New York local time. So I knew we had two bullish fair value gaps here. Then I looked at the 5-minute time frame. And what I saw was, well, that's a good thing. I don't know when this retracement will be over, and I'm not really interested in the short because, well, it's all internal. We didn't really sweep any major buy-side liquidity. Of course, the potential is always there that we could just retrace and dump lower, but I'm not interested in that. I would really wait for, well, essentially all of these bullish fair value gaps along the way, or essentially those two 15-minute bullish fair value gaps, to be invalidated, and then I would start to look for shorts again. So I just use them as a tool to decide, well, long or short, essentially. 5-minute time frame again. Had hit my first 1-to-1 risk reward, and then I came back at 2 p.m. I saw, okay, we're still trending lower. We're not really leaving behind bearish fair value gaps. Not at all, actually, except right here, 4:30. What do I always say happens around the 30-minute mark of every hour if we look at just at the hourly range? Well, we like to turn around at the 30-minute mark. Similar to what we did right here, 30-minute. 35, we started to trend up higher. 30 marked the low of the hourly candle here, 2 until 3 p.m. hourly candle, and we continued higher. First confluence. And of course, at this point in time, let's not do it with hindsight. We're in a downtrend. We have our 15-minute bullish fair value gaps. I had them marked out. First 15-minute, let's get rid of this. second 15 minutes. That's all I care about right now. Not longing on the 15-minute time frame. I'm waiting for my confirmation, retracement over confirmation on the 5-minute time frame. All right, it's 2:25. I'm already in the back of my mind. I already have in mind that okay, it's 30 reverse of 30, 30, 30 might play out. Let's see. All right, hit the 15-minute consequent encouragement almost. And now for the first time, we actually have a decent 5-minute bearish fair value gap. Decent size, not just 0.00 ticks or something. All right, so bearish fair value gap. We drag that out. We have lower highs, lower high, lower high. We actually also have a nice confluence of 1, 2, 3 pushes lower. And for all the classical charting pattern traders, this is essentially a bull flag. If you don't know what I mean, this is our pole. And this is our flag. And typically this is what happens for a bull flag pattern. That's how I started trading. That's why I still like to look for classical charting patterns. They have the name classical for a reason. Been around for a very long time, but that's not the point. We have our buy side liquidity. We have our nice bearish fair value gap that we can use to decide, okay, an early confirmation that the retracement is over. Otherwise, we would simply be waiting for market structures to change. This is our most recent lower high. This would be our market structure shift level. This would be buy side, and more buy side would be sitting right up here. And another short-term high we would be looking at would be this high right here. All right, so next candle, big push. Did it really push that big? No, yeah, okay, it did. I was like, oh damn, it could have closed above this bearish fair value gap already, but it didn't. Use the not yet inverted fair value gap to push up higher. Maybe we've seen something on the 1-minute time frame, 30-30 playing out. So I'm waiting for a good opportunity to enter on a bullish fair value gap now, since the inversion fair value gap didn't really present itself. Note that we didn't take out the high of the range yet. And now we're left with a bullish fair value gap right here. We know for a fact that the retracement is over because we have a bullish market structure shift. And now we also have a bullish fair value gap. We held support on our 15-minute bullish fair value gaps as well. Retrace to the 50% level of the lowest one. Now all we have to do is along the bullish fair value gap. Could place our stop right here at this candle's low if you will like to optimize your risk to reward. This would be my, well, easiest draw on liquidity. Take partials here, move your stop to break even once we close above that. And well, best, you can always leave a runner, but this would really be my best case scenario profit target here. Nice 3-to-1 risk to reward if we place it like this. If you don't mind, to give you a trade a little bit more room to breathe and you don't want to get wigged out or something, then I would place it like this. You don't really have to place it right here at the low, because now we have a bullish fair value gap on our side. Once we close below that bullish fair value gap and this inversion fair value gap here, we can get out of our position early, because that's already invalidation of the long, and we can, well, avoid getting stopped out fully. That's why, well, whether you place your stop loss here, 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 or all the way down here, it doesn't really matter. The only thing that matters is, well, your risk to reward ratio as a professional risk manager. So I like the 2-to-1 risk to reward. That's why I would not place my stop loss right here, because we get wicks, volatile wicks sometimes on NQ, just there to protect myself. So already start buying one in case I'm too slow entering on the fair value gap. Now we entered with 2, and like we just talked about it. With a CFD prop firm, so with futures, you would have been stopped out there because spread would have hit you and your stop loss would have been hit. With futures, well, there's also some spread, but usually you're only stopped out once it actually hits the specific price level where you set your stop loss at. That's just what I mean with price, especially on NQ, can be pretty volatile. And you don't want to be sitting here and saying, oh man, shit, I got stopped out again. Then price keeps on going into your favor. That just fucks you up mentally. And well, that's going to lead you to take revenge trades. And to avoid that, easiest thing to do is giving your trades more room. Still at a good risk to reward ratio, even if it's just a 1.68, it's still a fantastic risk to reward ratio. We have a confirmed market structure shift. We're holding support on 15-minute bullish fair value gaps. Now we have a 5-minute bullish fair value gap on our side. Pretty good trade to take here. Next candle. What does the next candle tell us? All right, nice. We engulfed this candle, this down closing candle with a nice rejection wick, coming back all the way into our inversion fair value gap down here. Nice up closing candle, almost no wick to the downside, closing back above our bullish fair value gap. That's pretty much all. Perfect. Let's place our first, well, let's do it manually because all we can do is set a take profit target. Take profit target up here. Stop loss down here, or let's put it at the 2-to-1 risk to reward like we said. What I would do, screw it, let's not be too perfect. All right, we come back into our bullish fair value gap, but look at this candle. This candle gives you already all the confidence you need that, well, at least your first profit targets are going to be hit. Your low-hanging fruit buy-side liquidity targets. Right, we hit them, we sell one contract, move our stop loss to break even, because like I said, we closed above these highs. Now our stop loss is placed at break even. And what do we have here? A new bullish fair value gap. And we hit buy side. We kept on rallying like that, pushing higher. This is why sometimes leaving a 10% or 25% runner makes sense. But 9 out of 10 times, at least, price doesn't run like this. And it's just better to, well, in my opinion at least, take your profits, close your charts, and be done. Simple. You saw the perfect opportunity, you got in, you engaged, and, well, you took a 2-to-1 risk to reward ratio trade with partials at low-hanging fruit targets. Or if you don't take partials, then, well, hard exit at 2-to-1 risk to reward, maybe leave 10%, 20% running off that position, just in case for that 1 out of 10 opportunity that price really continues to rally like this. This is, well, fucking rare. Of course, this would have been a 10-to-1 or 5-to-1 or past the challenge in one trade opportunity, but, well, probability-wise, you never know when these opportunities come. And let's say you trade like this and you always expect or anticipate moves like this, looking for your 5-10-to-1 risk to reward. Well, 9 out of those 10 times you blow the challenge. If you know, well, you lose the trade. You don't blow the challenge, but you lose the trade. So yeah, like I said, I'm talking too much here, but I think that was a pretty good example. Actually, also another good thing that I forgot while doing this little recap here. What did we retest with those 2 down closing candles? We didn't just retest the bullish fair value gap that has been beautifully presented here, and the inversion fair value gap, and once again, the 15-minute bullish fair value gaps, because yes, we filled them in. We had a nice 15-minute close, close above the most recent highs. Next 15-minute candle, retrace, 14:45. Timing. What time is this? 14:50, 14:55. New hour opens, and we shoot. With our market structure shift before that, bullish fair value gaps, and our dirty 30 reversal, down closing candles. Or, well, given the fact that we have a market structure shift here, we would look at our highest up closing candle, take the body of it, and label it as our breaker block. If you use if you use wicks or bodies, that's up to you. If you use just the highest up closing candle, or if you just have 2 up closing candles, this entire range or the entire body range, that's essentially all personal preference, if you ask me. Whatever works best for you. Retested the breaker block, bullish fair value gap, inversion fair value gap after a market structure shift, hitting a 15-minute bullish fair value gap, both 15-minute bullish fair value gaps, turning around at the 30-minute mark, rallying, presenting the perfect setup for the next hour. So yeah. Wish I would have used more risk on that trade, but yeah, I don't know. All my entire target was to break even on that day after the loss during the AM session, and well, typically after an AM session like this, where we just trend lower, you're very, very skeptical taking longs again on that day. You also have to count that in, because we didn't even look at that downtrend, what's to the left. We just look at what's right here, and it worked out. That's also what I mean with why I stopped doing these weekly outlooks, because it tends to overcomplicate things. If you would be sitting here knowing that, oh shit, we've got some weekly sell side or sell side from the higher time frame down here, well, you'd be super conflicted taking this long here. You're not flexible anymore. All you see is, all right, we continued lower, we left behind some sell side liquidity, we're going to run into that. So no matter what happens, my daily bias is bearish, and I'm neglecting perfect textbook long setups. My opinion. That's why I personally like to stay flexible. That it also comes at a specific cost, flexibility, and the possibility to trade into any direction can lead to over trading, because you can go long, short, long, short, long, short, especially during chop. That's really tricky. You can really mess up your PL, because now you have confirmation for a long, short, long, short. That's really where it makes sense to reduce the amount of trades you take per hour or per session to avoid that. But yeah, I wanted to share this little trade not because it's awesome that I took it, but it's perfect to explain. I mean, we just combined multiple time frames, 15 and 5-minute time frame. We didn't even look at the 1-hour time frame for value gaps. If we would have looked at that, then, well, those super big 1-hour bearish value gaps, they would have scared the shit out of us, and would have likely made us doubt that something like this could happen. That's essentially what happened to me trading this live. We combined, 15 and 5-minute time frame. We even incorporated classical charting patterns. We talked about the bull flag pattern, a internal fractal 2022 model, a 3 drives pattern, breaker block, bullish fair value gaps, inversion fair value gaps, order blocks, time, and price. Perfect setup. Yet, I took a long, Was it right here? Yeah. I think right here I took a long because I wanted to see the VWAP, the bearish fair value gap, and the midnight level right up here being retested before we continue lower. And then I would have waited for the short, essentially the invalidation of the long. Let's see where we're at right here. Yeah, exactly. So right here, we failed to run out into sell side. So all I saw was this inversion fair value gap, damn the 1 minute time frame. Entered long on the inversion, paired with this bullish fair value gap, targeting just these highs right here. Paired with the 5 minute bearish, the VWAP, and the midnight level. You don't see the VWAP right now, but it was right there. That's the midnight level, the dashed line. And the VWAP at this point in time was a little bit higher in the next bearish fair value gap. Didn't hit my stop loss. My stop loss was at this low right here. And once we closed back below this old bearish fair value gap, short time inversion fair value gap, and now, well, bearish fair value gap essentially again, a bearish fair value gap that has been violated. I was ready to go short, but I kind of froze. Essentially, I watched the recording again, and yeah, I just froze in a moment, not quick enough to quickly go into the shorts, because this is essentially what I've, well, wanted to see anyway. I just wanted to see, trade into here, quick 1-to-1 risk reward, and then ideally leave behind bullish fair value gaps, little market structure, shift, inversion fair value gap, take the short, align with the higher time frame, or wait for the proper confirmation, close back below this bearish fair value gap, the retest of it, close below here, we retested it right here, well, then we dropped. Big time. Then we faked out traders one more time with a fake market structure shift 2022 model right here, continuing lower anyway, grinding lower, another fake inversion fair value gap right here. Longs have been punished along the way, especially if you trade on a 1 minute time frame. So, and that's the thing, that's also a very good example. We're trending lower, and I'm pointing this out because it used to be me. I used to be the one trying to long here, market structure shift, bullish fair value gap. So at this point in time, I would be down 1%, 2%. I'm sure I would have found some reasoning to believe that this is a market structure shift paired with the inversion fair value gap, so I would be down 3% now. There's no real market structure shift in here unless you really want to see one. It has the potential of you entering, especially on a 1 minute time frame, and after losing 3 times, you just want to get in the winner and do your best to avoid losing or to avoid missing out once that reversal comes in. So likely you would have even seen something that's not there even on that setup. Let's leave it as a if, but you guys know what it's like if you trade it for some time. So after losing 3, maybe even 4 times in a row on potential market structure shift setups, now we get a new inversion fair value gap. We form a high, a higher low, and a new higher high. This is your break-in structure. We come back, hunt stops one last time. Once again, 30-30. Pick up stops one more time, get a bullish engulfing candle, and then we continue higher. The biggest issue with this, trying to catch the bottoms or trying to catch a falling knife, that's the best metaphor of it, is you've been burned or your hands are cut, you're bleeding all over the place, and all you want to do is recover. But at the same time, you're already, well, burned, you already cut yourself, you're already bleeding, you're already in drawdown, you already, don't want to say panicking, but panicking. You lost 3 trades in a row, shit. And you also lose faith that it can actually reverse. And then at the point in time where it actually turns around, you're too skeptical because the last 3 times around, price didn't continue higher. So you're most likely going to take profits too early and then be annoyed again once it continues to rally. And you're like, shit, I bought the low 4 times. The 4th time it turned around, but I closed too early. That's, well, it's a story of every 1-minute ICT, or not just ICT trader, but yeah, let's label it as market structure traders. Yeah. They all fail memory of tree until they stop failing. That's the issue. That's where it can become really handy to have higher time frame targets. You know what I mean? Because then you could roughly say, all right, here, this long doesn't make sense, and I'm better off just waiting for the short because we didn't take out major sell side, blah, blah, blah. All right, then here, all right, at this point in time, it was already a little bit, we cleared major sell side, but let's say you had your definite weekly drawn liquidity being down here, your previous week's low, then you could have avoided this because you know you have sell side below. And you have more sell side down here, so you could also avoid this one. And once you see the setup, right after we take out our weekly point of interest, or daily, or hourly, or 4-hourly, doesn't matter, and then you see the setup, that's the one you take. And you have to live with it if it turns around before that. But that's how you can, well, eliminate all this trouble you put yourself through. Thanks, Ashmody Basics. Thanks for the feedback. Enjoy your evening too. Let's see how many people we actually got watching. Memory of Tree and Ashmody Basic. Those are the last ones. And Coxie. Yeah, that would also be it, guys. I think we talked enough, and we did our weekly outlook. We talked a lot about psychology. We looked at the perfect reversal trade during Friday's PM session after the massive drop. Pretty much, yeah, nice stream. Really enjoyed this one too because it was really interactive. Let's see where the recording is at. 1 hour and 48 minutes. No worries. Glad you were able to all make it to this rather spontaneous stream. Like I said, I'm gonna be uploading it to YouTube in case you want to rewatch it. And yeah, we'll wrap it up here. So guys, thanks very much for joining in. Hope you enjoyed it. And yeah, we will be back tomorrow morning during the London session and live during the New York AM session. Take care and enjoy the rest of your Sunday. Bye.